Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta and we have a very green screen for ourselves today as we come to a close on the week. It's a full 80-point gain that we are seeing on the Nifty. The mid-cap index, once again, it's actually, climbed higher to do quite well. It's 265 points in the green. But I think the key good news today is that the banks are really participating as well.
Hi Pavitra, absolutely. We have the Bank Nifty which is rallying. Remember that yesterday we saw a cut of around 500 odd points on the Bank Nifty. So it's made up a little bit of that. So it's up around 300 odd points at this point in time. It's off the high point of the day. But nonetheless, there is some amount of participation from the financials. Joining us this afternoon, we have Kush Bohra, who is the founder of kushbohra.com, and Astha Jain, research analyst at Hem Securities, to answer all of your fundamental as well as technical questions. Kush as well as Astha, welcome to the show. But let's get talking about the first query that we have. We have Vikas Kumar, who writes to us from Bihar. He holds 150 shares of Zee Entertainment, which he's bought at around 230 rupees, making a loss there, and 70 shares of REC, which have been bought at 125. He's a medium-term investor and wants to know what to do, whether to hold or sell this particular stock. Well, Astha, let's kick off the conversation with you. They both are completely different plays within the broader markets, and Zee Entertainment is just fraught with so much of news. The latest on Subhash Chandra as well as Puneet Goenka. Now it's in the SAT as well. So it seems to be a long-drawn process which might weigh out. But what is your sense? How do you approach Zee as well as REC?
Good afternoon, Pavitra. Good afternoon, Ekta. So yes, Ekta, you are very much right that whatever the news flow which is coming in Zee Entertainment right now is not working favorably for the company. But I think it is a long grind process. It will take long time. So one really need to be patient if one has invested in the stock, because the other fundamentals are not looking that bad. If I look after the subscription revenues, so we have seen the rise in those revenues because the monthly active users have shown some sort of rise despite the entertainment has increased their price. So we have seen that the monthly active users has risen by 9%, I suppose. So that is working in favor of the company. In fact, Zee Anmol was one of the loss-making entities. So I think that was not working great for the company. But now we don't have that issue also. And Z5, I think it has started showing some sort of, profits, or started showing some sort of recovery. So I think all these things are working in favor, but we know that this merger is there. And in today only, that is 16 June is the date for the NCLT also. So I think the news flow is not positive, but fundamentals are not negative. So it is a mixed sort of things which is working in Zee. So right now, my take is if one is really patient to hold enough for a longer duration of 6 months or so, then I recommend to hold this stock. Talking about REC is looking good to me. I'm really positive on this company, and I'm setting a price target of around 175. So I think this is the new levels which I'm giving right now. So REC is looking good because the fundamentals are good. The kind of results they have posted have shown decent growth. In fact, the kind of tailwind which we are getting from the industry is also working in favor of the company. So REC is a hold, target is 175. For Zee Entertainment, if one can hold for a longer duration, then only hold, otherwise exit. So this is the stand on Zee Entertainment.
Okay, got that. Let's also ask Kush how he's looking at it. Kush, of course, the fundamentals and, those kinds of triggers are very different on Zee. For now, if you look at the chart, obviously, it's not done well this year, but it's also, if you look at the highest levels the stock has seen, it was well above 600 at one point. How long do you keep the faith in this one? And I get you have to be patient, but for an investor that's losing money by the day, I don't know how feasible that is. So what would you suggest on just a technical basis?
So I do hear or sense, your pain, or at least the investors, pain in this. And let me keep it very simple. You don't hold on to this, right? This is a relationship that just, doesn't give. So my point is, exit from this. If I look at, early December, the stock has made a very clear, lower highs kind of pattern. The only light of optimism, if ever, one was looking for 180, 180 is the level where the stock has attempted to make a bottom a couple of times, and it's rebounded from there. But then again, the kind of supply pressure that we see at every rise, just doesn't augur well, right? And now that, the market is doing well, there are a lot of other spaces that are doing well. Why would you want to even hold on to this? So a very clear exit on Zee. I share Astha's, enthusiasm on REC. Here, I think, you can continue to hold on. Even my target from a technical standpoint would be 170. The only, change in strategy that I would suggest is that since the gentleman is in a profit, it's not a bad idea to book profits partially here. I'm assuming this is a trading position. So book partial profits, hold on to the rest for a target of 170.
Okay, all right. So quite bullish on REC, but don't share that enthusiasm for Zee Entertainment. But let's move on now. We have Faraz Karachiwala, who writes to us from Surat. He holds 30 shares of Pidilite, which he's bought at 2,210. Medium-term investor wants to know what to do, whether or not he should exit, or there is more upside to this particular stock. Kush, what would you recommend on this? The 52-week high stands at around 2,916. Do you think that it'll probably just retest those levels, and one should probably at least stay positioned till those levels are revisited?
Oh, absolutely. If I look at this across time frames, daily, monthly, weekly, all of them have shown a very clear uptick. In fact, it's looking stronger on the weekly and the monthly, the longer time frames. So my suggestion would be definitely hold on. If booking profits is not urgency, there is no need for cash, then there is no particular reason to sell or exit this, despite the kind of run up that we've seen from about 2,300, 2,200 odd levels. So my suggestion would be hold on to this. I wouldn't rule out a move to about 3,000 odd levels, even higher. So yeah, hold on to this. If one wants a trailing stop loss, which is perhaps a good idea, then 2550 is the level where you should have your trailing stop loss. Otherwise, hold on to this. The stock's turned for the better.
Okay, hold on to this one. Astha, do you agree that this one is a good one to keep in your portfolio and you could perhaps see higher levels here?
Yes, I think it can be a whole. First of all, I want to give the price target 2795 to 2800. This is the price target initially, which I think one can set for Pidilite. See, the company is having a leadership position in the adhesives market. Plus, they have a strong brand. I mean, the distribution network is very strong, and kind of raw material pricing ease which we are seeing right now is also helping in company in driving the EBITDA margin, and we are expecting this company to show the EBITDA margin in the range of 20 to 25% going ahead. So I think things are really working in favor of this company, and macros are also looking solid because the kind of pickup we are seeing in the real estate sector as well as construction sector. So all these bodes well for the Pidilite, and I think the stock can move higher till the level of 2800. So yes, one can hold the stock.
Okay. Okay, all right. One can hold the stock on Pidilite. Well, let's get to another query. Nandan Kukreja writes to us from Gurugram, holds 100 shares of Castrol India, which is bought at around 102, and 100 shares of Ashoka Buildcon, which is bought at around 85. Long-term investor wants to know what to do with these particular counters, Castrol as well as Ashoka Buildcon. There's so many queries, Astha, which are coming in from the broader market. That seems to be really where people have put most of their money in at this point. For Castrol, what would you recommend? And for Ashoka Buildcon as well, there's so much emphasis in terms of the infra play. How would you approach that one?
So first of all, talking about Ashoka Buildcon, the kind of order book this company is having is looking very strong, because the order book which they are showing right now, it is almost 2.8 times of their FY23 revenue. So again, a strong revenue visibility going ahead, and this is what everyone wants for any company, from any company. So I think, order book is strong, revenue visibility is strong. So Ashoka Buildcon is really looking good to me. And I think this stock can, go till the level of 90, 92 or so. So Ashoka Buildcon as a whole from my side. Talking about Castrol, right now they are showing good results. It's a mixed bag of results which they are showing. Some segments are working good, some are not, especially this EV penetration. I think in the longer run, how this will play out for the company, that really needs to be seen. But in the shorter term, I think one can hold the stock. But for the longer term, we have to really see. So in the short term, I think one can hold, but exit also. So at the upper level, we are recommending exit from the Castrol India. I think one can exit at around 130 odd levels. So for Castrol, exit at the upper side is recommended. But for Ashoka Buildcon, it is a hold for the long-term perspective.
Okay, hold for the long-term perspective. Kush, Astha is saying that, you know, the pipeline looks very strong for Ashoka Buildcon. However, if you look at the charts, it's really not showing up right now, right? I mean, how would you look at this one? Because the stock has really not done much. Even if you take a slightly longer term view, the stock has not moved.
The big smile, hence the grin on my face, because you know my view is going to be slightly different, or actually completely different from Astha said on both the stocks. In fact, you're right, Pavitra. If I even change the time frames, the stock's been trading with a negative bias. Although the range has been getting narrower, and it looks like it's ripe for breakout. It's just too early to preempt a breakout after such a long fall. So I wouldn't be too enthusiastic just yet. As in when the stock crosses its 200-day moving average, which it hasn't done in a long time, then perhaps the tide might turn. But again, as I said, there are a lot of other better opportunities. So I would rather exit Ashoka Buildcon. There is a loss, but not much. So, shouldn't hurt as much. So I would suggest an exit on Ashoka Buildcon. As far as Castrol goes, yes, the stock is in a profit, is in an uptrend. Here, my suggestion would be to book profit partially and hold the rest for a target of about 135 to 140 kind of zones. The stock is now very clearly moving above its long-term averages as well on the back of strong volumes. So I wouldn't be surprised to see this momentum continue. Book partially and then hold on the rest, as I said, for 135, 140 kind of levels.
Okay, got that. That is both the technical and fundamental, perspective coming in on Ashoka Buildcon as well as Castrol. But with that, let's move on to our next query. We have Vinod Mandhana, who writes to us from Hyderabad. He says he has 80 shares of ISGEC Heavy Engineering, which he bought at 625 rupees per share. He wants to know whether he should hold or sell this one. Not a stock that we talk about too often, but Kush, this stock has done well. I was just looking at the, at the year-to-date returns, and it's done quite well right now, around 35% higher. Do you think it's this kind of rally is likely to continue?
Done phenomenally well. I mean, if you look at, just the last about 1 month odd move, the stock was, languishing at around 475, 480 odd levels, and for a very long time. And, this breakout was long due, and it's come and how. So, plus it's on the back of very strong volumes. So my suggestion would be, it's a very strong momentum. Continue, holding on to this one. No real reason, to even book profits partially. There is very good momentum. The momentum indicators also are suggesting an uptick. So I would suggest hold on. The stock could very well see levels of 680 and 710 in the coming, days, coming weeks time. So hold on. If you want a trailing stop loss, not a bad idea. You could place one at around 625 odd levels.
Okay, well done. Very well. In the past 6 months odd, it's rallied over 25%. Well, we need to take a short break on that note, but more queries and more answers on the other side. Welcome back. Well, steady for the markets. Mid-cap index is up close to 300 odd points, and the Bank Nifty, which has rallied over 300 points at this point in time. So it's picked up pace again for the Bank Nifty, moving close towards the high point of the day for the financials. But let's get a couple of other queries now. We still have Kush Bohra as well as Astha Jain joining in to answer all of your questions. We have Prasad, who writes to us from Pune, holds 200 shares of the logistics company VRL Logistics, which he bought at 580. Long-term investor wants to know what to do, whether or not he should be holding or selling the stock, and what is the stop loss. Well, Kush, small cap stock, it's rallied significantly, around 50% from the lows that it hit, in the past 1 year odd. But what would you recommend for to Prasad for his holding on VRL Logistics? It is also undergoing a lot of expansion. It's expanding its fleet by over 7,000 vehicles. But overall, what would you recommend technically?
So the entire space is actually doing well. So, no harm holding on to this one. In fact, first up, I think we should congratulate the gentleman, because he's bought it at a very decent price and held on, despite, sitting on handsome profits, which most traders or investors don't tend to do. Now, that said, I would suggest, that continue holding on to this position. The kind of run up that we are seeing, and the kind of, even though marginal, but the kind of uptick that we are seeing in volumes, there's a very good possibility that this could touch about, 770 and 800 odd kind of levels. So hold on to this one. Once again, trading stop loss is not a bad idea. 650 is where I would place my stop loss. That is also significantly above its buying price. So even if the stock were to slide, he'd exit in a profit. But 650 trailing stop loss, hold on for 770 and 800 kind of targets.
Okay, got that. Let me post the same question to Astha as well. Astha, your call on VRL Logistics. For someone who is a long-term investor, would you recommend keeping this one in their portfolio?
Yes, because I like this company very much because the kind of results they have posted, I mean, they were ahead of their peers. And this company is also looking after CapEx. So they have set the CapEx target of around 4.7 to 4.8 billion rupees, in which they will be adding more trucks, around 1,700 trucks they will be adding. And in fact, the kind of volume growth this company has shown is good, and going ahead, we are expecting this company to grow, I mean, at the 15 to 20% in their volumes. Similarly, for I talk about the realizations. Realizations were also good, and going ahead, they will keep on growing. And EBITDA margin also, we are expecting this company to post EBITDA margin in the range of 15 to 17%. So on the basis of the capex they are doing, on the basis of past financial performance, on the basis of what we are expecting it to post in the future, we are liking this company, and hence even I'm recommending hold on the stock. Price target is 770 to 810 from my side.
Okay, all right. So that's on VRL Logistics. Positive outlook coming in there. Now, let's get in another query. Harsh writes to us from Mumbai, holds 600 shares of CESC at 78 rupees. Wants to know the future prospects of his investments. Astha, over to you on this one.
So this is one of the fully integrated electrical utility company, and what we have seen, the performance was not up to the mark. And what is the dampener in the performance is the high interest cost, because the debt burden is high and their performance was muted in the Q4 of FY23. So we are not very much comfortable with the kind of performance this company has posted. So my stand is that one can hold the stock, but exit on the higher side is also a strategy which one can adopt. So right now I'm recommending hold, but exiting at around the level of 77 or so is a better strategy.
Okay, got that. Kush, your call on CESC. I mean, as I was talking about the performance not being good, the stock is also, pretty much stuck in this range for a while. What would you suggest?
I think Astha just put on a technical hat for just a brief while, because her advice happens to be exactly the same as mine. I wouldn't mind holding on to the stock because of the kind of base formation that we are seeing. But overall, if I see, the setup is not very encouraging. So if so the first option would be to just exit. But if someone wants to hold on, then 69 is where I would place my stop loss, and 78, 80 kind of levels, which is the buying price, is where I would exit. I wouldn't look for too much of an opportunity, too many higher sides on this one. So buying price is where you could exit, but on the downside, 69, keep a strict stop loss. If it breaks that, it could see lower levels of 60 also.
Okay, got that. Let's try to squeeze in one last query before we have to wind up. We have Shamal, who writes to us from Dehradun. He holds 500 shares of Praj Industries, which he bought at 365, so a little bit of a profit coming through over there. Also has 100 shares of Grasim, which he bought at 16 rupees. So I'm not sure if that's correct, and it's 16 or 1680. But in any case, he's saying he's a short-term investor with a 3-month horizon and wants to know what will be the level he can look for. So I doubt it's 16. It must be 1680 that he's looking at over there. But Astha, your call on both of these, Praj and Grasim?
So we recommend hold on Praj because I always see results first. If the result delivery is good, then definitely we have some sort of optimism and we can keep some sort of optimism. So yes, for Praj, it's like 40% rise, which they have posted in their quarterly numbers. So I think results were good. So on that basis only, I'm comfortable with the holding and I recommend hold on the stock. For Grasim, we don't cover the stock, so I cannot comment on it right now.
Okay. All right, Kush, as well as Astha, thanks very much for joining in and taking us through all of the queries. Well, for the markets, it's turning out to be a good last hour, or it looks like it's going to be a good last hour. We have the Bank Nifty, which is now scaled up to a gain of over 0.8% at this point in time. So just about nearing maybe a 1% gain. We do have the Nifty, which is up over 100 odd points, and the sensex also, which is up over 240 odd points. In fact, the Nifty has scaled above 18,800, so inching very close towards those all-time highs. Remember, the mid-cap index is already at a record high. That's all the time that we have on the show, but do remember to email us all of your questions and we will address them with our experts. Stay tuned for the last hour of trade.